European residential markets are having a good run. The house price cycle continued its positive momentum, with average real price growth around 4% in 2017, well above inflation. In the European residential markets, regional investment focus is crucial. Urbanization challenges cities, as the availability of land for increasing housing supply is limited. Between 2017 and 2025, only a third of European regions will witness growth in their working-age population. The remaining two-thirds should see their labour force shrink. In the long run, urbanisation will therefore create winning as well as losing cities, and it looks as if the number of winners will be smaller than the number of losers. This creates investment opportunities for institutional investors in areas like repositioning, conversion of existing assets, or forward funding of developments. The ongoing urbanisation and a constantly declining average household size require additional supply in cities. Construction activity is growing by over 10% year-on-year in many European countries over the past several years. People are starting to worry about a construction-led property bubble. The current level of construction at 0.7% of stock is probably more about stabilising stock than expanding it. We assume that the current housing stock has a lifetime of between 100 and 200 years. This will require replacement construction of between 0.5%, 200 years, and 1%, 100 years annually. Gross addition significantly over 1% can only be seen in Nordics, Poland, and Austria. And even in these countries, significant net additions over a longer period of time rarely take place. We can therefore conclude that, with the growth in completions, the market is following household needs and adapting to changing requirements, as some stock is outdated. The residential universe now includes all types of accommodation used throughout an individual's life cycle. The progression starts with daycare as a toddler and moves on to student housing during the university years, a micro-apartment or serviced apartment as a young professional, other PRS options as a couple or family, and senior living in the last stages of life. Nearly every fifth euro in Europe is invested residential. The number one destination for residential investment remains Germany, with an average share of nearly 40% of European institutional residential transactions in the last 3 years. The well-known megatrends of aging and urbanisation, combined with investors looking for stable income streams, are creating a situation that will increase the attractiveness of residential even further. Given high demand and low supply, housing development is an attractive option across Europe, particularly for IRR-driven investors. Even in former crisis countries like Ireland and Spain, housing shortages can be identified in major cities such as Dublin and Madrid. For European buy-and-hold multifamily housing strategies, we should expect total returns in the range of 5 to 7% per annum over the next 5 years. Want to get the bigger residential picture across Europe? Download the full PATRIZIA Insight Report on European residential markets 2018-2019. PATRIZIA. We're building communities and sustainable futures.